Good morning and welcome to Market Monday for November 25th, 2024. Happy Thanksgiving from all of us at Collaborative Wealth. There's so much to be grateful for, including the opportunity to serve you, our trusted clients. And while we're at it, let's also send love to anyone going through a tough time. You're in our thoughts, and we hope that you can find some joy and light this Thanksgiving. As we've been talking about lately, this year is shaping up to be one of the best election years in history, head and shoulders above the other years, except for one. Looking at the only other better year on record, see what happened through the remainder of the year? Actually selling off through the usual part of the year. See that? However, still ending the year at a very strong 20+% return on the year. Speaking of the historically strong part of the year, this is what we mean. Here are a couple election year composites. Here are all election years. The last 10, and here's the last 5. Of course, this year, right here. And yeah, it's a pretty clear trend of what usually happens through November and December. No guarantees, just history. So what's driving the markets higher? Earnings, for one thing. We've been talking about this every week for the past few weeks. It looks like earnings projections bottomed about a year and a half ago, and wow, screaming higher still. This is not the stock market. We're looking at earnings projections over the next 12 months. You see, a lot of folks are ringing the bubble bell, saying the stock market is in bubble territory. Well, we disagree. Have a look. Over the past 5 years, 60% of the growth in the stock market has come from earnings, and another 15% from the dividends. The remaining 25%, of course, from that fancy word multiple, meaning investors paying more for those earnings and dividends. Well, here's another look, and you may even call it the kicker. Remember those projected earnings we were just looking at? That's the same orange line right here. In this case, from 1998 through 2002. Earnings projections. Here's the market in blue. Yikes. See how the market ran up and became completely uncoupled from earnings? What do we say is the mother's milk of the stock market? What do we say the market will always catch up or down to over time? Earnings. This is a textbook example of that. Now let's go to the last 5 years. Spot the difference? Market and earnings projections in lockstep with one another, like they're dancing to the same beat. But no, Chad, don't do it. But not so fast. Folks, we have to give you the full context. 2 quick considerations. 1, as strong as earnings projections have been, they can always come down as they are projections. Also, the market doesn't just care about the level of earnings. It cares about how fast that number is growing. Here's second quarter of this year in orange. 14% earnings growth. And here's third quarter, 9%. So if we get a fourth quarter earnings estimate lower than 9% growth, the market's likely going to reassess how much it values those earnings. This is precisely what happened in 2018, where even though we had earnings growth, the market sold off 20% due to a lower multiple, or investors paying less for those earnings. And today, we'll leave you with this. Is Bitcoin in a bubble? Wait, is this headline wrong? Bitcoin is right around $100,000 now. Not $100, $100,000. I see. This article is from 2013, and yes, at that time, the media was asking if $100 Bitcoin was in a bubble. Have a great week.